So that's it. It's a 150 basis points increase on the MPR. So now it should now cost you about 26.25% to borrow, cost of fund. Dr. Adedipe, I mean, yourself and Professor Nana, we're talking about between 50 and 100, yeah. But I think the CBN, the MPC, the MPC surprised you.
They added the lower and the upper limits.
Yes, okay, so everybody's correct. From 50 to 100, so we just put it together. So this makes about 750 basis point increase this year.
That's quite huge, and it makes me worried. Worried because of the implication of that for the cost of funds and also impact of that on the real sector. Now we are in an environment where we want to encourage more of domestic production. We have complained repeatedly about productivity being very low. So, and of course, looking at the bottom of the pyramid, where we have mostly the SMEs, or let me even put it as MSMEs, that also dominate the registered businesses in Nigeria, over 90%. So in which case then, this hike in the MPR, for me, is going to negatively impact that bottom of the pyramid. Not just for those that borrow directly from the banking system. Don't forget also that the financial system itself has different segments. So for those who don't borrow from the deposit money banks, they borrow from the microfinance banks. And that is where you see a lot of those at the bottom of the pyramid going to borrow from. Now, the pass-through effect of this, in fact, the CBN rate, the MPR, we describe it as a signal rate. The signal to the banks now is that they should also make their loans more expensive, because the object is to contract money supply and in the process take power away from what drives inflation. But when you look at the real critical element in inflation, it is majorly cost push. So in which case, I see this working in contrary to what CBN expects. Now, contraction is supposed to dampen inflationary pressures. But because of the nature of this increase, that will impact the cost of funds and eventually the cost of doing business. And of course, those businesses that must still borrow will find a way to pass the cost to their own consumers, which invariably will again feature in the inflation rate that we are trying to control. And the unfortunate part to it for me is that what we discussed earlier, the impact of production, output, which now becomes what we aggregate as the GDP, is likely to also be dampening. And that's where my concern is.
Let's leave the concerns of Professor Nana. Professor Nana, so it's 150, higher than you expected or you projected. I know you've already expressed your worry. Even at 50 or to 100, you were already worried. I wonder what you see now.
Well, the truth is, 150 basis point hike, like my colleague already alluded to, is very pernicious to the real economy. Those at the bottom of the pyramid, households and MSMEs, which I earlier alluded to, will feel the effect almost instantaneously. You will find banks will immediately write to their customers advising them of their new rate in terms of their loan agreement. So that, in effect, is hurting businesses across the country. However, what I've also observed here is that it's a signaling effect. So what the central bank, or rather the MPC, has done here by hiking rates by 150 basis points to try as much as possible to pull down the inflationary pressures, in my mind, they have also signaled to the fiscal authorities that, look, I am doing everything I can. I've thrown all the tools at this problem. Now, it's now left for the fiscal authorities now to respond in kind and adjust accordingly. And whether, if you notice, the central bank governor did say that the insecurity issues prevailing in some parts of the country preventing farmers to adequately go back to their farmlands and so on is key. So in my mind, beyond that aspect of insecurity, the fiscal authorities need to find a more concerted way in terms of fiscal discipline, prioritize spending, and ensure that ultimately it culminates in inclusive growth. So in my mind, like, I will close by saying this: 150 basis point hike is quite large, and the immediate effect will be pernicious to households and MSMEs. So when they say they expect real GDP to grow by 3.38 for the year, if you're raising rates this high and cost of borrowing becomes higher, and banks will be less likely to lend funds at that level because of fear of getting repayments back on a timely basis, I suspect real GDP will not get to that 3.38%.
So obviously it's a price to also deal with inflation, but at this rate, do you see the CBN hitting its target of about 21% by the end of the year?
Actually, my forecast says it's not going to get to 21%. Internal forecast we have is around 24.5%, thereabout, at the rate of hikes. So we see lower bound figures 24.5, upper bound closer to 28%. It's not a silver bullet. It's not a magic wand like the governor mentioned already. So I don't see the 21 inflation target being met this year. Maybe next year, but for this year, at lower bound figures, we still have around 24.5% as we see it.
That is if this hike continues, I guess.
Correct.
Okay, so Dr. Adedipe, help us paint the picture of a stunt growth, a squeezed GDP. What picture or what impact, reality check now, on individuals, especially small businesses? Those are the people that will be affected most by all of this.
I will put it in this context. What share of our GDP is produced in the informal sector? Depending on whose data you are looking at, it could be a little below 50%, it could be a little above 50%. But if we take a band of 42 to 52, 54%, that means the effect of this, which for me is dampening, would likely bring a contraction in GDP growth rate. And that means what we had as our outlook, first and foremost at the beginning of the year, and then at the beginning of the second quarter, that was in April, is going to have to be moderated looking forward. We may therefore see GDP growth rate not up to what we had projected. In our firm, we're looking at 3.74 for the year, but we are looking now at a shaving of maybe about 30, 40 basis points from that. In which case, we could be looking at something just a little above 3%. But if we now sustain this into the second half of the year, then we likely not see growth anywhere close to 3% for this year. So that is why I mentioned earlier that I am worried, because we seem to be overplaying the monetary policy tool in solving the hydra-headed problem of inflation. At the time, we should have taken a respite, kind of, and said, we don't want to overplay this, so let's face the fiscal authority squarely and let them recognize that the ball is now in their court. So in which case, we wouldn't have gone this way, but we have gone that way already. But what this also speaks to is that if we are looking at the next 2-3 months, the next meeting equities in July, okay, we should begin to tell ourselves whether it is worthwhile to continue to tighten monetary policy or actually take a break and allow what you have done thus far to wash through the system. I'm also concerned for the banks, because the basic thing in banking is the more expensive loans are, the more trouble loans you create, depending on how you look at it, whether non-performing or portfolio at risk, depending on the segment. So, and if that happens, it means banks also on their own will not be creating the kind of volume of loans that can drive output. And those that are already stuck with the banks, also, again, as we said earlier, their cost of borrowing, their cost of doing business, and then the prices of the selling prices of their products will also have to be marked down. And that is even where the consumer don't resist it. Because if there's consumer resistance of an increase in price of your products, then you're in trouble.
Yeah, because I remember manufacturers did say that their warehouses were stocked
That's what I wanted to say.
products.
Yeah. Warehouses will now
at
be
the end
filled
of
up.
last year, yes.
Okay, so that becomes a major problem for the economy. And we must
But
not
is it
overlook
too late? Is it too late? We have the next meeting in July,
Yeah.
you know, and I think we have 1 or 2 more before the end of the year.
Yes.
Is it too late if after this there's a pause? Do you think perhaps it could still help the growth of the economy?
If there's a pause after this, we may likely see some respite. But also, what has been done thus far by the monetary authorities is fully complemented by the fiscal authorities. We've been talking about this repeatedly. What we need now is action where it matters. If actions are taken where it matters, then we may see a need for monetary authorities to now hold and watch how all of this play out.
So if we don't see that action, then the only hope we have is the monetary policy, which will continue to squeeze life out of the real sector.
Well, if I were in that committee, I will advise us that whether the fiscal authorities respond or not, we should take a little break. And we must also learn lessons from other jurisdictions. And that is my major point I want to make here, that whatever policy we want to introduce should take a cue from the peculiarities of our geography and not just consider that, oh, some other jurisdictions, you know, they are hiking rates in order to fight inflation, or in some jurisdictions, inflation rate is subsiding because rates are being hiked, forgetting that our credit market, number one, is not as sophisticated as those jurisdictions, on the one hand. Secondly, look at how many entities in Nigeria actually borrow from the structured credit market, where these rate movements impact largely. So, and then talk about those that create most of the jobs as well. So in which case, it can also affect our ability to grow the economy inclusively. It's a major, major challenge we faced in the last 3 decades. So for me, therefore, it's something we need to be careful about. And that was why I said, if I were in that committee, I won't just advise myself, I will advise my colleagues that we should look at all of this carefully and ensure we don't overreach the tools available to us as monetary authorities.
All right, Professor Nana, so what happens to the Naira now with this 150 basis points hike? What do you see?
Well, right now, I think it will probably still remain, like I said, the price discovery will still remain between 1,004 to 1,500. It boils down to the liquidity at the disposal of the CBN. That's the FX liquidity. How much money they're willing to keep on pumping into the market will determine how strong the Naira becomes. But hiking this rate at this level will attract investors naturally, I believe so. So that will naturally give us some elbow room when it comes to our reserves. But the question now becomes, how much of that is the central bank willing to put at the disposal to help defend the Naira? Because in the end, every country defends their currency, whether you want to say it, whether you're using a reserve balance or you're not. But in the interest of the question, I think for now, price discovery has been around 1,004 to 1,005 for now. But in the medium term, it will naturally come down further to a more acceptable level. But and that's when you see Dangote saying the diesel price is coming down and he's going to keep selling at that level. So that will help a bit. But in the end, productivity is what we need in the country for long-run sustainable sustainability of the strength of the Naira. So if we don't have that right now, then we'll still keep on seeing a level of volatility with the value of the currency. So right now, your guess is as good as mine, but for now, price discovery remains at 1,004 to 1,005, as I've earlier said, and it will get better, but that's after some time has gone through. So transmission mechanism for the information that's come down at this MPC.
Yeah, well, but I guess it's also important to emphasize that it will get better if only the right steps are being taken. You know, if we're on that path, I don't know if it will just get better because of time.
No, it can't better because of time. It can't get better because of time. We need active steps, productivity. We need monetary and fiscal policy coordination. So we need fiscal discipline. We need coordinated spending. So there's a lot of different things that need to occur simultaneously. Hands in glove to grow the economy inclusively. So it's still early days. This information is going to pass through the banking system, and I'm sure my colleagues in the commercial banking space right now are already writing to their customers and hiking up rates, or advising their customers rates have gone up, so therefore your rates are going up too. And that makes it much more difficult to grow the economy. As we've already alluded to, MSMEs are the engine of economic growth. And if they have a higher borrowing cost, it implies that those costs will ultimately pass through the system and get to you and I, the ultimate consumers, who end up buying these goods. So yeah, I think we're tough times ahead. But the president has already said that the pains are going to be there in the near term, but there's a light at the end of the tunnel. So let's just be optimistic and hope that the fiscal authorities, as well as the monetary authorities, continue to work together and coordinate their affairs for inclusive growth of the Nigerian economy.
It sounds like there's a huge responsibility here for the coordinating minister of the economy, because even the CBN governor has said that, and we've discussed it here. Yes, the CBN is doing, or the MPC through the CBN is doing a good job hiking rates. We see the pressure, inflationary pressure reducing, and Dr. Adedipe here has told us that inflation has just about 30% or so. I think that's what you said, the impact of hiking rates on inflation. So you have a larger chunk, you know, going to the fiscal policy. So, but it doesn't seem like we've heard much of the conversation and the action of coordinating this. These challenges have been with us for years. You're talking about storage, you're talking about infrastructure, you're talking about... They've been here with us for years. We saw this coming, but it doesn't seem like a whole lot is being done as intentional as we need for it to solve the problem.
And yes, to a large extent, you're right. But I think the truth is baby steps, because in the end, when we're coordinating the affairs of fiscal and monetary policy, it's not a big bang approach. So whether this counter-cyclical measures, when we're in a down cycle, for instance, the government can choose to spend. And how they spend determines how we grow, whether inclusively or not. So counter-cyclical measures, for me, I'll look at it from the lens of, okay, what is a low-hanging fruit I can easily say, I'm checking this box for a quick win? Irrigation. If you have infrastructure around agriculture, irrigation is a quick win. Housing deficit in Nigeria is, I think the last estimate was around 28 million units. 28 million units, yes. And in my mind, that could be a priority for government to focus there. That could easily be a marketing campaign to show the Nigerian economy what they're doing for the real sector. So there are little instances, little buckets where you can check off and say, you know, we're doing work here, and these are the dividends of the pains we've gone through. And for right now, the coordinating minister, I think his hands are full, but believe it or not, he is doing a good job in trying to ensure every aspect of the economy is pulling together. It might seem hard, it might seem like not much is being done, but I assure you, there's a lot of meetings being held, a lot of policies being put together, and is now the implementation, where the rubber really meets the road, the implementation. But my challenge, and what really concerns me deeply really, is the fact that you have a situation where the exchange rate at the ports is set by the central bank or something like that. And when you have that, businesses who are importing equipment, who are importing goods and so on, will have a difficult time to plan. So for instance, at the beginning of the year, I may have said to myself, I'm a business owner, I need to import X amount of equipment and so on, and goods, at this price point exchange rate. But because the exchange rate continues to be volatile, at some point, whenever I can get my goods cleared, what tends to happen is I have to pass that cost to everyone. And that's where the so-called cost push comes into place. And because you have a situation whereby the volatility of the Naira impacts businesses, Manufacturers Association of Nigeria will be up in arms because their members will tell you they're having a difficult time offloading their goods. Nobody is willing to pay for these goods at this high cost. So the challenges are real, and we need to continue to work together to ensure prices make sense and businesses get some level of reprieve. And that's where I believe the fiscal authorities need to start, will need to continue to lift the heavy weight here.
All right, Professor Nana. Well, Dr. Adepe, just briefly now, we're almost out of time. Professor Nana did talk about spending of the government. And we've been talking, we did hear that there were going to be merger and reconstruction of ministries, parastatals, to reduce the cost of governance as one way to, you know, contribute to this from the fiscal side.
That's right.
I don't know how much of that has gone. If you're hopeful that will also help us in this situation that we're in at this time.
It's a very major step. I think we should move from the rhetoric to execution. You used the word earlier on, and I was happy about it. You said intentional. So in this particular case, we must be intentional and deliberate in dealing with the cost of governance. We've been talking about this now, at least personally, I've been involved in this for close to 15 years. So the question is, why do we keep talking about this year in, year out? It's time for us to actually implement that and now take the benefit of that low-hanging fruit.
All right, so we're looking for those benefits, Dr. Adedipe. If you see it first, please share with me those benefits of cutting the cost of governance. And as you said, it's been a conversation for many years in this country. We were really hopeful when we heard that. And we even have an app tracker that is supposed to track the efficiency of, you know, public servants. But we wait to see those benefits. But thank you so much. Thank you so much for being a part of this, Dr. Biodun Adedipe, Chief Consultant, Biodun Adedipe Consultant. Thank you for your time and your perspective. We appreciate that. Also, Professor Joseph Nana joined us from our Abuja studio. He's the Chief Economist of Development Bank of Nigeria. Really appreciate your perspective and your time this afternoon, gentlemen.
Thank you for having me.
All right, so that's it. Decision day, 150 basis points increase on the MPR. Businesses are watching, and as Professor Nana said, perhaps as we speak, commercial banks have already started writing out those notes to their customers on how much they will have to pay more for servicing their debt. The impact, the conversation goes on right here. Business Morning tomorrow, 10 a.m. You don't want to miss it. You will find out how it will affect you in the long or the short term. I'm Ini John McQuarrie. It's been a pleasure spending this time with you. I'll see you tomorrow. God's grace.